What's up everybody, I am Jaspreet Singh, and 10 years from now we're going to look back and you're going to see a whole new wave of millionaires that became millionaires through this economic craziness, through these volatile times, because more millionaires are made during recessions and market crashes and volatile times than any other time. And this is where now, if you were younger, if you're a millennial, what you want to be doing is you want to be looking for the right opportunities. Even if you're not a millennial, you want to be looking for the right opportunities where now you can capitalize on what's happening around you, because the reality is this next decade is going to change the landscape of our economy. It's going to change the landscape of literally how our system functions, and you are going to see some people become incredibly wealthy because of it, while other people are going to sit there and watch it happen, while other people are going to be crying that it is happening. And this is where you got to decide, which one of the three people do you want to be? Do you want to be one of those people that are just sitting there crying about how the system works? Or do you want to be one of those people that are sitting there just watching it happen? Or do you want to be one of the people that's taking advantage of the opportunity? That way in the next 10 years, you could be one of the people that becomes wealthy because of all the craziness happening in the world. The opportunity is here, it's around us, and it's coming. And this is where now you just have to decide which one of the people that you want to be. Because if you want to be one of the people that takes advantage of the opportunity, it requires two things. One, it requires the right financial education of knowing what to do. And second, it requires you to be prepared. Because now if you're educated but you have no cash to be able to capitalize on the opportunities, well, it's going to be more difficult. Not impossible, but more difficult. So you need to be prepared, meaning have the right resources, the right education, the right cash, the right whatever it takes to go out and capitalize on the opportunities. And this is where now the financial education will help you actually do that. If you've been subscribed to my channel, you already know the difference between an asset and a liability. But let me give you a quick 15 or 30-second refresher, because an asset is something that you buy for the sole purpose of making money. This could be a stock market investment. This could be a real estate investment, not the home that you live in, but a rental property that you purchase. This could potentially be investing in a startup. This could be your own business. This could be owning physical gold. This could potentially be cryptocurrency. So an asset is something you buy for the sole purpose of making money, versus a liability is something you buy to look rich. So your liabilities are things like your Gucci, your Louis Vuitton, your cars, your vacations, anything that you're buying that isn't directly putting money in your pocket. Those things are liabilities. And while these liabilities will make you look rich, because when you have a nice car, you have the nice handbag, you have the nice stuff, you look rich, but these things are actually keeping you broke, because now you have less money to buy more assets, which actually make you richer. See, it's kind of weird, because the more assets you buy, the broker you look in the short term, but the richer you're actually becoming. Because when you're spending more money buying stocks, and you're spending more money buying real estate, and you're spending more money buying these investments, you have less money to go out and drive a fancy car. You have less money to go out and have all the nice flashy stuff, and less money to go out and go on these nice vacations today. But over time, now your assets can grow, and now you have more money to go and do whatever you want without having to go and stress about the money. See, there's nothing wrong with having nice things. I don't really care if you buy designer stuff. I don't really care if you're spending a lot of money on nice things. My worry is I want you to be able to afford it first. So now, in this economic environment that we're in right now, where we're seeing a lot of volatility, we've seen the stock market get hit, we've seen cryptocurrency get hit, we're seeing the real estate market now start to slow down, we're seeing the economy start to slow down, you have to understand that this does create opportunities. You've heard the saying that one person's trash is another person's treasure. Well, in this type of environment where people lose jobs, when assets get hurt, this is some people's trash, but it can also be your treasure if you're willing to think a little bit differently. I've talked about this in multiple interviews, but the word recession gives so many people anxiety. It causes stress. It causes a lot of just anxiousness, because you think recession, layoffs, bad things, the economy slowing. But for the minority of people, if you start to think different than the majority of people, now you can hear the word recession and hear opportunity. And this is where now you have to be able to find the right opportunity. But in order for you to do that, you got to have less money go into your liabilities. That way you have cash to actually purchase investments. Because when you have these types of slowdowns, when you have these types of volatile markets, what that means is now you're going to have some assets that go to zero. You're going to see some companies go bankrupt. You're going to see some companies go under. You're going to see some bad deals that just go and get annihilated. But what that also does is that brings the price of good assets down as well. And this is where now you can come in, find some of these good assets, and purchase them at a discounted price. Think of it like Black Friday shopping for investors. Most people think of Black Friday shopping and they're going to go and buy a whole bunch of liabilities. You're going to Macy's and buying a $300 sweatshirt or jacket or whatever you're buying from Macy's. But for an investor now, what you're doing is you're finding a good asset at a discounted price. Now, this is where, one, you have to have the right financial education, and two, you have to be prepared. Because now, for the majority of people, in order for you to see this opportunity, you first need to have the right financial education, because for most people, what happens is they hear crash or recession and they run away. They just start pinching their pennies, and now they get scared, and now they are all talking about how people are losing their money in the markets. People are losing their money in whatever asset class you want to talk about, so you should not buy, and which is why you want to sell at a loss and just get away from every investment possible because it's scary and things are going down. But what the minority of people are doing is they're saying, oh, you're telling me that these assets are going down? This is when I can come in and buy, because now you can buy more for the same amount of dollars that you have. You're just buying them at a discounted price. And so now you want to start thinking differently, where you want to find the discounts. You want to find the good investments that are on sale. But that again requires the financial education to find the right investments. But then two, to be able to capitalize on them, you need the cash in order to do that. Now, this is where preparing is so important, because now when times are okay, you want to be working hard to earn more money and spend less money. That way you have a margin. Because now when you have this margin, you want to be able to take this cash and put it aside. That way you can use this money to invest. Now, I'm not saying that you need to perfectly time the market. You don't have to perfectly buy at the bottom, because it's impossible to time the bottom. There's so many other factors happening in the economy that can influence when the bottom will be. So you never want to try to get into the business of trying to perfectly time the bottom. But what you can do is now you start looking for the right investments. You start looking for opportunities. Maybe you start researching stocks and you say, oh, I would love to invest in this ETF, or I would love to invest in this company. And when you see the prices of these assets go down, you can come in and buy. And you can buy them in phases. That way, if they keep going lower, you can keep buying more and buy them on the way down. So now the further down it goes, the more aggressively that you can purchase. But it requires you, again, I'm going to go back and forth between prepared and financial education. It requires you to have the right financial education. That way you can research the right companies, because the last thing that you want to do is buy your way to zero. And so you want to be able to know what is a good investment versus what's not a good investment. And this is where now understanding how do you research a company. And you can go to a website like seekingalpha.com. You can go to Yahoo Finance. You can go to a bunch of these stock research websites and just start researching the company. Start looking at the revenues. Have they been growing? Have they been standing still? Or have they been declining a lot? Are their profits dropping? If so, why? Is it because of what's happening in the economy, or is it because the company itself is struggling? Because if a company is getting hurt due to the economic conditions, that's one thing, versus if a company is getting hurt because they're running their own company into the ground, they don't know how to create a good product, they don't know how to manage their cash flows, that's a much bigger concern. What you want to be looking for now are companies or investments that are getting hurt by the economic conditions, because the reality is we will get through this. We will enter a stronger economy sometime in the future. And this is where now, if you believe in the future of the American economy, you should believe in the future of strong assets. And this is where you can come in and find some of these strong assets at a discounted price, because when things are down, when you're in a slowing economy, when you're in a slowing market, people get scared, they want to sell, they want to run away, but it creates opportunity now for the people that think differently than the majority of people. And this requires you, again, financial education and preparedness. Before I go further into how-tos of investing, if you're looking for an easy way to stay up to date on what is happening in the top finance and business news, and you just want the real news without all the fluff, without all the sensationalism, then you have to check out Market Briefs. It is a free financial newsletter that I created, where every day my team is breaking down what's happening in the top finance and business news, from the stock market to the real estate market to crypto to inflation to the global economy. It is fun, easy to read. Even if you don't have any sort of financial background, it is going to be super easy for you to understand. It is a super fun read. We may keep it super light. It's funny. Well, I think it's funny. You'll see for yourself if it's funny or not, but it's fun to read, and I promise you, you are going to look forward to reading market briefs every morning. So if you want to join market briefs, it's completely free, and I'll put the link to how you can do that down in the description below. This is where most people are looking for a step-by-step guide on what do I do to become wealthy when things are bad. Now, there's a few different options that you can do, and this is going to depend on your risk tolerance and really what your goals are. If you are the type of person where you're like, I don't want to spend the time and energy researching companies. I don't want to spend all that effort trying to keep up with everything. I just want to get exposure to the markets. That way now, no matter what's happening, I will be able to benefit and I don't have to take on all the anxiety and stress. Well, if that's the type of goals that you have, well then one of the simplest things that you can do is just create a dollar cost average system where every week you're just buying a little bit more of some stocks or ETFs that you want to own. So an ETF is an exchange traded fund and it gives you exposure to a group of stocks. So some that you can consider are ETFs that give you exposure to the S&P 500, something like VOO or SPY. Little disclaimer, I am personally invested in VOO. So you can just start investing your money into ETFs like this every single week, and now you do this whether the market is up or down, and there are apps that will completely automate this for you. That way you don't have to manually do it. And now what you're doing is now you're just getting exposure to the markets. Now whether the market's going up or down, you're getting the benefit. You can also invest in ETFs to give you exposure to emerging markets. If you're worried about inflation, you can invest in ETFs that give you exposure to innovation and technology, because that's going to be the sector that gets hit the absolute hardest as interest rates go up and as the Fed is working to fight inflation. So you got to understand kind of where you want to be and how much risk tolerance you have. I've already made a video on my channel talking about different ETFs to invest in during a recession if you're looking for specific ETFs to invest in. So if you want to go the passive way, that's what you can do. Now, if you want to be more actively involved, meaning you want to spend more time actually looking for the right investments, you want to spend more time actually keeping up with your investments, it's more risky, but you can also get better returns. Well, now what you can do is you can invest in individual companies, you can invest in real estate, you can potentially invest in cryptocurrency if that's something that you're interested in, or you can consider investing in actual businesses, startups or businesses that you can run and operate depending on how much cash you have and how involved that you want to be. Now, again, just like with everything else, what you're looking at here is a strong company that's being hit hard by the economy, because now you can come in and buy at a discount. The simplest example I can give you is back after the 2008 crash, I was buying real estate, some single family homes and apartment complexes. And what would happen with some of these apartment complexes is you had people that would get very excited and they were buying these apartment complexes with so much debt because they were trying to just manipulate the system and have 100% leverage and buy properties that they didn't know how to manage with a bunch of debt. And now they got in over their heads, and then real estate prices went down and now they're completely underwater and the banks forced them to sell. And when the bank is forcing you to sell, you're going to sell it at a discount, especially when the market is down, because the banks want to let go of their asset as fast as possible. And so in those situations, I was able to come in and buy some of these businesses, the apartment complex, at a big discount because the banks were forcing the seller to sell cheap. And so now the whole idea is you want to find the right opportunity for you. Maybe you want to invest in real estate, maybe not. Maybe you want to invest in stocks, maybe not. Maybe you want to invest in startups, maybe not. Maybe you want to own an actual physical business, maybe not. And this is where you just want to find the right opportunity where now the business is good. The business is strong. The underlying asset is good, but the economy is pushing the price of this asset down, and this is where you can come in and buy at a discount. And so now it's all just a matter of what it is that you want to invest in, because the first asset class in any sort of market correction or slowdown that gets hit the hardest are your liquid investments, things like stocks, things like cryptocurrency. These are more volatile, and as you see more fear or panic, you can see the price of these assets get hit very hard very quickly because they're liquid. You can buy and sell a stock in a second, but it can take up to a year, if not longer sometimes, to sell some real estate, depending on what kind of real estate it is. And so you just have to understand how these different asset classes move, and you want to find the right opportunity. Now again, does this mean that you want to wait for the perfect price? No, because one day in the near future, the Federal Reserve Bank could say, you know what? We're done fighting inflation. Instead, we're going to turn around and we're going to start stimulating the economy. We're going to start doing more quantitative easing. We're going to pump up the markets. This is possible. If that happens, then you can see the price of assets shoot up. So this is where, again, not only do you want to be financially educated and prepared, but you want to understand what's happening. That way you can actually capitalize on opportunities that happen around you. Because if you're just sitting there waiting for the perfect opportunity, well, you might just see it pass by you. When the 2020 market crash happened, when the economy first shut down in March and the early part of April in 2020, we saw the market collapse. The stock market was going down at the fastest rate ever. And during that time, I was making videos. And I kept talking about how I was buying, how I didn't know how much lower the market was going to go, but I already had a list of companies I wanted to own. And now I just kept buying. And I called it drip investing, where now I'm just buying in phases. Every time I see a good investment fall by 10 to 15%, I'm coming in and buying. And if it falls by another 10 to 15%, I come in and buy more aggressively. And the comments that I kept getting were, why would you buy more? Wait until it completely collapses and then come in and buy. Or the other comments were, the whole world is ending. Why would you want to buy stocks? Why would you want to own assets? And then what happened was the Federal Reserve Bank opened up the money printer, and then we saw the stock market rally at the fastest rate ever. So this is where you don't want to try to perfectly time the market, because there are external factors outside of just our economy that can influence the price of these assets. And this is where now you want to understand how things actually work, but also understand that these types of markets and economies create more opportunities than any other time. So this is where you want to get financially educated and prepared. That way you can actually capitalize on the opportunities that come your way. Most people don't learn financial education because most of us don't have rich parents to tell us the financial education.
Right.
And so if you don't have that, how do you do it? Well, now thanks to YouTube, it's decentralized education. Like, you can learn anything from anyone, which is good, but it's also bad because that means you can also have really bad teachers.